Money at Work Continuing Education Series. Today's episode centers around learning privatized banking. So how is it possible to spend and earn a rate of return on the same money in two places at one time? So what makes privatized banking so powerful? It's a combination of four things, really. That's the growth, the collateralization, the tax advantages, and the uninterrupted interest. So let's kind of break this down. The growth. Your money grows at a better rate of return than typical liquid cash accounts like a savings account can offer. Secondarily, collateralization. Instead of using your own money, you leverage against it using other people's money. Remember, that's one of the rules of the bank. And then also tax-free. Growth inside your system can be accessed tax-free, while most other liquid accounts are going to be taxable. And then finally, the uninterrupted interest. Your money continues to grow inside your system even while you take a loan against your collateral. What is privatized banking? What exactly is this? Well, privatized banking is a combination of both a system and a product. It's a whole cash flow system of money management with two crucial components. Number one, system. You have to have a system of storing capital and then using it as collateral without interrupting the growth inside that money warehouse. And then number two, product. You gotta have the product with the most safety, liquidity, growth, as well as any other possible additional benefits to give you the most control. The money warehouse. This is where you're going to park your money. You need a safe and reliable place to park your cash where it gets the most possible benefit. So just like any other warehouse where you house whatever it is, think of this as your money warehouse where you store your money and then use it. So when you're looking at money warehouses, things to consider when picking out which one would be best for you. There's four things really to consider. How much can I use? How quickly can I access? How does it grow over time? And then what are the guarantees associated with the warehouse? It really comes down to three things that are most important factors that you need to know. Safety. I can count on my money to be there and also not lose. Liquidity. I can easily access and use my money, which is not locked up behind restrictions, fees, taxes, or any other special qualifications. And then finally, growth. I can get a decent rate of return and a competitive rate of return in a safe and liquid money warehouse. The best money warehouse is specifically and tailor-fitted permanent cash value life insurance if and only if it passes the macro and micro litmus test for the needs of the situation. Once again, this video is for educational purposes only. This is not a recommendation to buy cash value life insurance. It is an ongoing recommendation to continue to teach yourself and learn about how money works. So back to the question, how do I have my money in place working for me while still having the ability to use and access it for any time, for any reason? Well, the answer really is the creation of the circle of wealth. And we've been talking about this. The money warehouse in this example, cash value life insurance, is the warehouse for the money. And then it sits there and we're able to use that warehouse of money as a collateral to take out loans. And those loans can be used for outside activity, either to buy things, to pay off debt, or to put the money kind of quote unquote back on the street, earning another rate of return and another type of investment. Once again, all cash value life insurance contracts are not created equal, very, very different. And you need to understand what you're doing and work with a professional if this is going to be a system that you want to check out and possibly implement. Educate yourself. That's the most important thing. And by doing this, what we are allowing ourselves to do with this system is taking control and taking advantage of the uninterrupted compound interest. And the power of compound interest is so important, which means you're taking advantage of the continuing compound interest even while your money is also working somewhere else. So that uninterrupted interest, that is years of compounding on top of each other, is so important in the system. Remember, it's a combination of both the system in place as well as the product of the warehouse that you use. This is not magic, it's math. And the power is in how you use it to get the results that you're looking for. In conclusion, when you look at most opportunities, putting your money to work, it just is put to work one time. Say on the investment side, you put your money in, you earn a rate of return, you take your money out. Privatized banking is unique because it offers the unparalleled opportunity to put the same money to work in two places at the same time. That's because you put your money into the privatized banking system, it earns a rate of return for you. At the same time, you also put it to work in another opportunity as well. Even while your money is out there working in another way, it continues to work inside your privatized banking system, earning returns in your privatized banking system right alongside whatever else the money is doing. That means that you have the money, the same money, working in two places at the same time. You want to learn more about privatized banking, the program, anything about what we just discussed, contact us for a free online strategy meeting. We lead with free and pure education to help you understand what the possibilities are for your situation. You want more personal financial advice? MillionaireMindset.life. Stretch your thinking, create your vision, and achieve.